The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Markets with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. It's nice to come on and talk about what's happening in the world of commodities. Shawn, how you doing this morning, man?
Doing really good. Florida Panthers winning their first Stanley Cup in my backyard, 20 minutes away from where I live. Very exciting game, and certainly glad to see that outcome, although it could have gone either way. So,
how is the ice in Florida this time of year?
it's pretty wet. I actually went skating with my daughter last week. We have skating rinks. We actually do, and it's kind of funny because, you come in from the outside, it's 92, 93, 110% heat index. And then, of course, when you're on the ice, it's freaking cold, man. You got to wear sweaters and gloves and all. So it's quite an interesting place to skate, at least in the summertime when you have such a dichotomy of temperature.
Yeah, I was in Florida last week and up in the Panhandle, Panama City. It was the hottest I've been in some while. It was rather warm up there.
Well, we've had a lot of rain now, so the insects are as large as people in terms of the mosquitoes, humidity. You wake up in the morning and you need a knife to walk walk through the air. It's typical Florida. And then we get into hurricane season in August and September, which is just so much fun. So this is not the time of the year the reason why you live down here. This is the time of the year where you remind yourself why I live down here, for the weather that we just had. And this is what there's everything in life. There's a cost. There's
a fee somewhere. Right?
There's a fee. This is our fee to the 9 months of the best weather on the planet. This is what we have to pay. This upcoming 3 to 4 months, and so this is our rites of passage that's the cost of living here. And so, yay! Looking so much forward to it again.
Good times.
Happy
Good times for everybody.
Happy times. Yeah. Yes.
Well, so speaking of hurricanes, let's talk about that a little bit. When I was down in Florida, they were talking about, Hurricane Alberto or something like that, or Tropical Storm Alberto or something like that. That was in the Gulf, stirring things up, and there were some big seas when we were there. So talk a little bit about what your anticipation is for hurricane season. And is this going to be one of those years where we see more Atlantic hurricane type storms, or do you feel like there could be some action in the Gulf that could send some big storms up through the Midwest?
We really feel, La Nina, we're sort of in this neutral sea surface temperature regime in the Central Pacific, which on the margin will create less of a favorable environment for the Atlantic storms to develop as rapidly. So at least for South Florida, where I live, that's a good thing. Okay. The Bermuda High is more easterly this year positioned, which means that the hurricanes typically follow around the high, and as long as it stays more easterly positioned, it means most of the storms coming off of the Atlantic will likely curve, into the Atlantic, or if they're going to do something, it'll kind of just clip the coast, but probably not. I'm not anticipating this to be a very high impact. Of course, it only takes one, but I'm not expecting this to be a high impact. Coming off of Africa, the African wave train, as they call it, I don't think it's going to be that active in terms of ones that are going to come in and impact Florida or the Southeast, that sort of thing. Another thing that's starting to happen is we're starting to see a very aggressive push of Saharan dust that is making its way over here, and that's another big factor for those Atlantic storms. Do they develop? Do they strengthen or not? And if you have all this high concentration of dust in the atmosphere, it dries the air out. It prevents those storms from accessing, the kind of moisture that they need to really grow. And it can change. I mean, obviously we're only here in late June, and obviously it matters more, but we are starting to see that those winds really fire up. We're starting to see a pretty good push of Saharan dust. If that were to continue, as we move into August, that would tend to also dampen the Atlantic season to some extent. Another interesting thing is we've seen some significant cooling of sea surface temperatures in the tropical South Atlantic and the tropical North Atlantic, meaning right around the coastline of Africa where those African waves come off of. That also tends to reduce the ability for these storms to develop and develop strongly. So that is that part of it. The other part of it, however, is that the sea surface temperatures in the Caribbean, in the Bay of Campeche, and the Gulf are super, super hot. These ingrown storms is where I've been anticipating, and my forecast has been that we're going to see significant activity. And we've already seen some significant activity already. In Florida, we had this incredible 10 to 25 inches of rain, depending on where you were down where I'm at. And then we had the storm that went into Texas, and Mexico did the same thing. So yes, Gulf of Mexico storms developing in the Bay of Campeche, developing in the Caribbean, these ingrown storms. That's, to me, where the action is going to be. Where that's where you need to watch for flooding in Texas, flooding in the Deep South, flooding in the Southeast, where a lot of crops are done. If the Rex block maintains itself, meaning that high pressure sitting in the central north, central, north area, then what we're going to see is that moisture is going to ring around like this. And that's what we've been seeing. So let's reverse. We had this really hot weather, dry weather in the central east grain belt, but then the high pressure system is pushed, this Rex block is pushed south a little bit, and the moisture from the Gulf is pushed south, and now it's been running around, and when it comes around the top, it's been coming through southern Minnesota, northern Iowa, southeast South Dakota, northeast Nebraska, and going east, and it keeps spinning, and it keeps spinning. That's why we're having this epic flooding. And that is created where it's not too much rain. It's created some cooler, wetter weather, which is good for crop development right now. And one of the reasons grain markets remain under considerable pressure is that the market likes to trade. Rain makes grain. We're not seeing the heat's backing off, but it does look very, very. We believe very strongly that this Rex block is going to move back to where it was, move more northerly. And as it moves more northerly, it's going to push those rains to Canada, and the rotation of moisture is going to end, and we're going to get back into a much hotter, drier pattern moving into and through the 4th of July weekend. If that happens, we showed a couple of charts earlier this week to our subscribers that showed analog years where our current prices for corn, for example, are matching very similar to 1983 price pattern and 2010 price pattern. Both of them had strong negative corrections into this month-end report, into the early part of July, and then had a violent turn up after the 4th of July weekend because the heat in both those years did come, and the market got really, really worried about crops. Right now, everyone is saying a trend line to above trend line yield crop is guaranteed. That's what we're trading right now. But if the heat comes in, that will, and of course, all that flooding in that high yielding ground, we know that area is not going to deliver. And if they don't deliver in that high yielding ground, other parts have to deliver. If they don't, we're going to have ourselves well below trend line yield crop. If we lose quarterly grain stocks for corn here on Friday and we lose more acres, which I think the USDA should say, we could get ourselves into from a 2 billion bushel carry out to a low ones very, very quickly in the corn market, just like that. And so that's what we're thinking is going to happen here is, for, month end, quarter end at the end of this week. The market likes to pound markets into that from a capital flow standpoint. But if we do get this ridge moving back north, post 4th of July weekend is when the market makes its decision on July weather. Either you break down or you break up. July 8th, we broke up in 2010. July 11th, we broke up in 1983. 1998, which was another analog year that was similar, we broke down on July 12th because we had a cool July. So the heat is the key. Right now, I think we're still on track for that heat to come back and excite the market again. So we'll have to see. But that's where we think we're at right now. We're following a counter-seasonal pattern, making highs when we're supposed to make lows, making lows when we're supposed to make highs. We think that continues in the month of July.
Looking at the forecast, you look at any 3-day forecast, and there's nothing but dry conditions and a lot of heat coming associated with that. Out here where I'm at, we got 100 plus degrees every day this week, and then next week you're looking at some 103 and 104 degree days. So heat's definitely here, and it's
watch the warm nights in. Watch for warm nights as well, Casey. It's very, very detrimental to have too many nights, north of 70 degrees at nighttime temperatures, at hot, humid, warm nighttime temperatures. 2010 was a very warm night scenario. 1983 was a very warm night scenario. 2011 was a very warm night scenario. All of those years had significantly below trend line yields resulting from warm nights, not to mention the places that got those high daytime temperatures. Warm nights, and so far in the month of June isn't that critical. I don't mean to say that June is important for warm nights, but it sets the template Right now, we have the largest number of warm nights in the month of June ever. That usually is sets the tone for what we're likely to continue to see in July. So, I know everyone follows the high daytime temps, and it is important, but keep an eye on those north of 70 degrees, especially 75-degree warm nights, where there's a lot of rain and a lot of moisture. That's where the biggest risks in those areas are. Be mindful of that. That could be a serious crop killer.
Yeah. Okay. All right. Let's talk a little bit about as you're looking at the dairy side of the business. You still seeing some news pop up around the bird flu situation that we see. Can't really say that it's done anything to the cattle marketplace as far as actual cattle prices and those kind of things go. But I guess looking at that, Shawn, are you seeing any side effects other than that? If you look back when it first got announced almost 2 months ago now, there was a lot of worry in the marketplace, but it seemed to subside. I can't say that I see anything going on there, but what's your opinion on that?
Well, there was an initial worry that we would see the flu spread into the beef cow herd.
Right.
Didn't happen. Hasn't happened. If it hasn't happened by now, not likely to happen. And I think the biggest reason it hasn't happened, and the bigger reason it probably won't happen, is you don't jam beef cattle into a shed, and where they're sitting on top of each other, breathing in the same air like they do, with chickens and dairy cows. So I think that's the saving grace. Secondly, there was a concern that maybe there would be excessive cow culling in the dairy industry to offset the flu that would then overburden parts of the food chain in the beef supply side. That hasn't happened either. We're not seeing dairy cattle die. We are seeing their production fall considerably in the first 45 days and then gradually, slowly grinding their way back, but not in a situation where you want to cull them. And given the very high replacement costs and the shortage of dairy replacement cattle right now, the dairymen aren't excited about liquidating their herd and paying record high prices for replacement dairy cattle right now. So that hasn't happened. So what you have in the cattle market, you just have ripping cash market for cattle. You have strong, very, very strong beef cutout. And this is with very, very weak consumer demand, very weak consumer economy. And the cash market is just ripping. Ultimately, that's the driver here, Casey. If the cash cattle market and the cash beef cutout market can rip with very weak consumer demand, and those supplies, I think, are only going to get tighter later in the year. It sure looks to me like the cattle prices are not done going to the upside, meaning that usually the final peak in cattle prices occurs when the U.S. producer finally decides it's time to rebuild the herd, which we haven't been willing to do up to this point. Eventually, we will do it, and I think if we start to see signs that we're doing it later this year, that's how you get your final demand rationing rally. We're developing this very tight continuation wedge pattern since the fall. That pattern ends at the end of July, meaning that coiling pattern ends, which means you either break up or break down very, very aggressively when you break out of those patterns. No one knows for sure which way it's going to go. My best bet is, though, fundamentally, looking how cash typically leads the futures price. As long as cash stays as strong, I would think we'll eventually get break out to the upside. And then that'll offer another tremendous opportunity to sell if you're in the cattle business. The milk business, the price has been strong, surprisingly strong, given how much cheese we have. And ultimately, though, the supplies are going to continue to get tighter and tighter. If it wasn't that the consumer was so weak right now, we probably would be pushing near record high milk prices right now. But because demand is so weak, and and we still have some supplies left over from last year's surplus, we're keeping ourselves, at check around 20 right now. But at some point, supplies are going to get too tight, and we're going to have to go higher. So short term, we might have a summer correction just because of the weak demand and supplies that still have to be worked through. But as we get into the fall and beyond, especially if the cattle market breaks out to the upside, I'm pretty excited about what's going to happen here in dairy for the dairymen. And they might, after the worst 18 months of equity loss in the history of the U.S. dairy industry, we might be looking at the most significant 18 months of equity rebuild ever seen in the dairy industry. Feast or famine, unfortunately, but it looks like the feast might be in front of us and the famine is behind us.
Right. Okay. So let's talk a little bit about exports. China has come in and got some soybean exports, all on old crop. They haven't seen any new crop contracts that I'm aware of anyway, that they've thrown their hat in on. I guess looking at that, does that tell you that maybe, hey, this is a short-term thing, or is it just they're waiting to see what happens with Brazil, or what? I guess what's your thought there?
It was interesting. There's a lot of debate about Brazil. The USDA says, that the crop's much, much larger than Brazil says. I mean, I think it's the greatest disparity between the two we've ever seen. So obviously somebody knows the truth. I think the truth is closer to CONAB's numbers than the USDA numbers. It was very interesting. If you look at cash basis in Brazil, incredibly strong, like super, super strong cash basis. Usually cash basis means you have a supply shortage at that price level, meaning it doesn't mean supplies aren't there. It just means they're not there at the current price. Well, if they're not there, that means they're not selling. They're not selling. The cash is having to stiff it against the futures, and they're not getting Brazilians to sell. That either means they don't have it, or they don't want to sell it, or it's a combination of both. So long as that situation is in place, is telling me that China's not getting what they want from Brazil, and it may mean they're going to have to start buying more from us to offset, at these price levels at least, what they're not getting from Brazil. Obviously, if we have hot weather that comes into July, and it looks like maybe that would carry over in August, and everyone starts worrying about a soybean crop that could be in big trouble, then all bets are off, and then the Chinese will likely very, very quickly try to get things righted for them. They just can't mess around on soybeans. They just don't grow a whole lot of them, and they need a lot of them, and they can't mess around. So I think they're in a delicate balance. In my opinion, we see a heat ridge move back north post 4th of July weekend, and we start seeing the market dialing in the potential for crops to be below trend. I think you're going to see them being very active in importing more U.S. grain, than we've seen, and maybe what some of these purchases are the early stages of that process. So that's where I think we're at. But keep an eye on Brazilian cash basis on soybeans. It shouldn't be this strong. If they have as many as people say, it should not be this strong.
Okay. Let's talk. Okay. So let's talk a little bit about the wheat to rice ratio, and a little bit there. So you're looking at what's going on in India. India has stopped all exports; they're importing everything in. They've done all that. You see what's going on in Russia, like I talked about, where we're seeing some signs of a weaker crop. They're not being as transparent with their crop information as they have.
Russia's not transparent?
No, it's shocking to know. So they're running through that, and so now you're looking at world wheat supply where they're at now. We're having a great harvest here in the United States, which is odd. I think surprised some people, right? We've seen about almost $2 come off the price of hard redwood wheat over the course of the last 30, 45 days, something like that. But everything points to that the world has, we're going to still be short on supply when it comes. The U.S. might have a good crop, but the rest of the world is struggling right now when it comes to wheat. As you look at that, Shawn, you start looking at where rice is going to start playing a role in offsetting some of the wheat issue. What's your thought there, and where do you see both the wheat market going and the rice market?
But just remember, we don't control the price, the wheat price. Right. Russia does. Yes, short term harvest pressure. We talked about this well before this, that we thought we'd have a big setback. We were aggressive cash sellers, as you know, near the highs. Right. So yes, but at the end of the day, over the last 3 years or so, we've had some of the worst U.S. wheat crops ever, and the market is fallen because we don't control the wheat price. It's Russia that controls the wheat price. They're harvesting too, by the way. So the weather market's over for now, and harvest pressure is nearing its end according to typical seasonality. The drought hasn't ended. The heat hasn't ended. It's continued. And that means if it continues into the end of the summer, what does it mean? We're going to be talking about how many acres are they going to be able to plant for the winter wheat crop for next year, right? Because they start planting in September. If they have bone dry weather and it stays that dry, and we think it's going to stay that dry into September, we're going to be talking about lower acres, terrible stands going to dormancy after already having one of the worst crops they've had in over a decade. So we think we've fully or more than fully priced in harvest pressure. The supplies have to come off. The weather market's over. Speculators selling, all that sort of thing. And now we're moving into a different trade where we're going to trade. The reality is that with Russia's crop production likely being down 20 million metric tons or more from what it was supposed to be, the next big thing we're looking for is for them to announce export restrictions. Russia's going to come out at some point. It wouldn't surprise us if it happens in July. They're going to say, we're going to start restricting our exports to blank because we're worried about production, we're worried about high prices domestically, and inflation and that sort of thing. That probably is the next big catalyst, is Russia restricting exports. And if they start restricting exports, the rest of the wheat supplies and the rest of the world as a percentage of demand is at 35-year low stocks to usage. So we have a situation that looks very, very positive fundamentally to the upside now that we're getting near the end of a typical harvest pressure season that typically turns sometime in the first half of July, and that's when we expect the wheat market to start turning around again. And there you have it. That's what we think.
All right, John. Good place to stop there. If folks want to reach out to you, get more information about what it is you're doing at Hackett Financial, what's the best way to do that? Twitter page is at Faradex11. We also have a website, Hackett, Hackett, advisors.com. Time to time, we post interviews, some tidbits, some statistical information of how we look at things with our work to see if how we look at things with cycle statistics and correlations would be of value to those that listen and watch your show. Sean, appreciate you being the podcast fan. We'll catch up with you again here later this week. We do have on the calendar July 2nd. We are going to have that special that kind of fell apart on us here earlier in June. My fault there. I had some scheduling conflicts and things come up, but we are going to make this happen. Time frame is going to be 6 o'clock Central. Sean and I are going to have a discussion about what's going on there, and Sean's really going to dive into some of this weather volatility stuff that he's been talking about here and really go into what that looks like. So, Sean, I'm looking forward to that. I think it's going to be a lot of good information. Definitely looking forward to that, and hopefully, your followers get a lot of value out of it. That's the hope here. So, yeah, we're going to be live on YouTube, my YouTube channel, and so look for that. I'll send out a link here and start getting that out there so everybody can see that, and we will get that going. But yeah, Sean, looking forward to that. We're going to get that out there so people can see and kind of roll into that. Because we talked about here, I think there's some this July time frame, the way things are shaping up, there could be some significant issues with how the crop produces, and then especially coming off of Friday's report, what that looks like. There could be some real fireworks in the month of July. Sounds good, Casey. Look forward to it. Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Go to the Moving Iron Podcast YouTube channel, which is the Moving Iron Podcast YouTube channel. You can find all the video version of this there. Go to LinkedIn at Moving Iron Podcast, and while you still can, go check us out on TikTok at Moving Iron Podcast as well. Go to movingironllc.com for everything Moving Iron related. You get all the information from Moving Iron Summit coming up here in Nashville, Tennessee, November 4th through the 6th. Sean will be there talking about what's going on there with that. So with that, I'm Casey Seymour with Shawn Hackett. It's going to be some iron, folks. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer, Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. You find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again.